Hey everybody, Economic Ninja here. I hope you're doing well. We're going to talk today about gold. Why is the gold price so strong right now, even as the Fed just raised rates a quarter of a point? And where is the Fed funds rate going to go from here? There is so much speculation that the federal funds rate or the Federal Reserve is about to slow. They're going to stop raising rates. But I'm going to show you some things that are going to tell you otherwise. But even in this environment, with interest rates going up, you would think that gold would be going down. But we have quite a conundrum right now between payrolls exploding, inflation exploding, the world walking away from the dollar as a reserve currency. The Federal Reserve is literally at a worst case scenario. So let me share with you this. Also, I'm going to put down a link below of a company that I have worked with before. I bought gold and silver with I know people, big names that have bought through this company. They work really well with people. They have an awesome website. And if you want to go there and you're new and you want to buy a coin to try them out and then literally wait for the physical delivery to show up in your hand, I would suggest this company. I'm going to put a link down below because I'm getting a lot of positive feedback about this company. All right, so let's share the screen right now, and I'm going to show you what is going on. Now, this news right now is blowing up. This story was out on the front of uh, CNBC today, and has already been pushed down as the regional banks are crashing, right? Now we're already past that. We're going to start talking about, I'm going to show you charts of gold and charts of the Fed funds rate and explain to you why we're seeing so much strength and why gold is up really nicely today. But let's start with this story. Private payrolls surged by 296,000 in April, much higher than expected. Okay. Now, again, these are the data points that the Federal Reserve is watching to judge whether they are going to keep raising rates to try and break the economy, or they're going to wait and not raise rates because they have officially broken the backbone of the retail investor, retail consumer, and they've done their job, right? I know it sounds crazy, but that is their goal. They want to get you to stop spending. How do they do that? They literally break your bank account. All right. Private payroll surged by 296 in April, much higher than expected. It says right here, they rose by 296 in April above the downwardly revised 142 the previous month and well ahead of the estimate for 133. So even regardless of what number you're going for, the 133,000 estimate or the downwardly revised 142, to come in at 296,000 is an absolute blowout. It's massive, okay? The Fed does not like seeing these. They need to slow you down in spending, all right? It says it was the fastest job growth in April, or the fastest job growth in April came in leisure and hospitality with a gain of 154,000, followed by education and health services, 69, and construction, 53. So now what that's telling the Fed as well is that people are spending their extra cash on leisure and hospitality, and they want to stop that, okay? Sadly, right now, credit card debt is at an all-time high, and that is telling you that most of the people out there spending their money on travel and leisure are spending money they do not have. And boy, when that comes back to bite them, it is going to happen so fast, and it is going to cause a catastrophic failure in the credit markets. It says here the financial sector lost 28,000 jobs for the month. Manufacturing also took a hit, losing 38,000. These are not good for the economy. When we're losing manufacturing jobs, it means that we're producing less. All right. So that's important for people to understand. Now, let's look right now, as of the recording of this, where gold is. Now, check this out. Gold is up $22, silver up 1%, silver's up 2%. Why? Because as the banks are crashing, people are moving into safety, right? And then also at the same time, people on Wall Street, investors, speculators are expecting or speculating the Fed is about to slow interest rates, right? So that would be everyone's diving into gold, because the second they do, then there will be a point where the Fed stops raising rates. And I believe that comes around the fall to December. All right. They will stop raising rates. And the reason why is because they've broken the system, right? And everything's cascading down. You're going to see sell-offs in the stock market, things like that. Then what comes after that? Quantitative easing, right? Pumping money into the system, creating more dollars out of thin air, which means that it will take gold and silver to all-time highs. Now, let me show you those charts right now. Let's start with the Federal Reserve, and let's look back from 2000 or 1999 till today. This is the Fed funds effective rate. Now you see they're on a raising cycle coming into the .com crash. This is when I sold my, took my retirement and I moved it from the index funds into the bond fund, all right? A bond index fund. Because I knew, excuse me, I'm getting excited. It's hard to just talk amongst yourselves. Just gargle with some coffee. All right, so this is where I knew that we were going to have problems, and you see this pause right here. The backbone of the retail investor and the retail consumer was already in January of 2000. That's why they stopped. It actually broke back here around the spring of 2000. All right, that's when everything started to go downhill really, really fast. So you see, they still rose after this, and then they just paused. Extreme pain, extreme pain, extreme pain. And then the markets were just imploding. So they started drastically lowering. Now you see that this gray section right here is the recession, the official recession. Like I tell people all the time, we are already in a recession. I don't care what the president says, I'm going to change the definition. We're already there. All right. Even though numbers are being cooked, all of the revised numbers are literally showing you how they lied and they were wrong in the beginning. The recession always comes after the crash, right? So you see the Federal Reserve start drastically dropping rates, drop, drop, drop. Now, I started buying my real estate right here. When they plateaued at the rates, we still dropped some more. So, but I started buying my real estate right here. I was super pumped. Because what did I see? I saw that as rates were dropping significantly, people were going to get greedy and start bidding up homes. So I started buying homes like crazy. If you want more information for that, go take a look at the real estate crash course. There's like 29 videos on it. But anyway, so if you see here in 2004, mid 2004, that's when they started rising again, right? Now let's go and this was a long rise. Think about this. June of 2004 to July of 2006. Literally almost a little over 2 years to the date, they went raise, 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 raise. During this time, this is your pain point for real estate, right? And it sounds funny, but during this last blow off top, the real estate prices are also blowing off. And then again, a plateau. Now let's take this time frame and let's look at gold. So let's look at June 2004 to July of 2006. All right. June 2004, right here. This is gold price. All right, here, June 2004, $600 when this thing started. Now, the reason why the gold price actually went up as the Federal Reserve was raising rates is because investors inherently know that as rates rise, it becomes more and more difficult for investors to keep up with that rate of rise, right? Debt markets get more expensive, which means customers have more costs and companies have more carrying costs, all right? Not carrying costs, but debt cost, all right? So as you can see from June of 2004 until right here, check this out, 2006. Let's go find it. Boom, 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 boom. December. There we go. July of 2006 right here. That was the rise during that amount of time. Now, remember, there was a plateau, right? This plateau right here is extreme pain, extreme pain, extreme pain. Okay, the markets are already crashing. Housing's already going down in mid 2007. We're already having regional banks having problems, right? They're already starting to pop off, but the Fed was backstopping them. Exactly what's going on here. Look at what happened to the gold price. The gold price dropped down just for a little bit, but then it started its rise again, right? Now, this is what I want you to understand. This is very important to look at. This is what I've been talking about, the paper price of gold selling off coming into this fall, I believe, because you're going to see massive, when the stock market starts to sell off, and this is right here, you look at March 2008, think about it, Bear Stearns goes out of business, right? Going from Bear Stearns to right here, the bottom, right a week after Lehman Brothers closed, you see the paper price of gold sell from, let's see, at a peak of 1,300 and change down to 1,000. But here's the thing. During that amount of time, even though paper was selling off, people were racing into physical. So the premiums shot up. So you didn't get to see that much of a discount. What's different today is that the amount of knowledge that has been shared around the globe about gold and silver, people get it now. They spent 2 years in their home during COVID learning about this stuff. That's why we're already seeing a stellar, strong price for gold, right? And that's why I suggest you go with reputable dealers, and I'm putting that link below. Now, but think about this. When it bottomed, gold price bottomed in October of 2008. Check this out. Where are we in October of 2008? Right. July. Right there. The Fed had almost gotten below. When it finally bottomed, December of 2008 is about the price gold bottomed. And look at the meteoric rise it went on, just a total terror, topping at 2,400. And this is now there's right here. There's a contention. This adjusts for a couple different things, right? But really, the price of gold topped around 21 something change, right? There's a bunch of different metrics you go by, but just look at this rise. That's really what I wanted to point it out. Now, what happens next? Federal Reserve drops rates and they stay low. Markets stabilize, right? So that's where you saw the price of gold. Like everything's like, okay, the panic's done, the panic's done. But look at where we are now. This is what's very important. This is that recession that was created by COVID, right? Super short. And we all know there was breaking in the market. We got super close. This thing is it's adjusting for other things, but I'm just trying to show you the overall look of the chart. As it was trending down, it's now popping back up, right? We have a super strong gold price right now. And you think about it, gold firms as banking woes sustain stellar run. We are now in a moment in time where fear is starting to hit the markets. And it's starting right now with institutional investors and accredited investors, people that have been around markets for a long time. They're starting to move into gold. And we're seeing that paper price pop. Well, as the paper price pops, it creates more of a panic into precious metals. And so I wanted to show you this today because I think this really shares I want to give you that broad view of what's going on. I still believe you could see a paper sell-off going into the fall as the stock market sells off and hedge funds that were like buying up paper shares of gold and silver, which are completely fake. There isn't the same amount of physical precious metals stored in relation to how much paper has been sold. But right now, to say that we're starting this collapse with, in earnest, the collapse has been going on since 2019, but to see it, the public's now seeing it and they're starting to do stuff. You're starting to see the markets rile with a $26 price of silver and a $2,000 price of gold is insane because the last run took us from 600 ultimately to 2,000. Where's gold going to go right now when it's at 2,000? You go to 5,000, 6,000, possibly 10,000. You literally have a fracturing of the world's economy right now. And all of the countries that are leaving the dollar, they're all buying gold. So I'm trying to warn people that you should have a little bit of an allocation. Not a financial advisor, not a financial professional. I'm an investor. And I look at the history to tell me what's coming in the future. And so I'm not playing the little minutia of like it goes up a buck, it goes down a buck and trying to trade. I'm trying to just get a hold of it because there's going to be a day you just physically can't get it. Right now, it takes sometimes, between 2 weeks and 30 days to get the metal because it's literally as soon as it gets off the truck in the factory or the company, they're shipping it out. But it's literally that's how tight it's getting. So I want to make sure that everybody has a fair shake and gets a few ounces of silver or an ounce of gold. It's just put a little bit of money into it just to hedge yourself against inflation. All right, I hope you got something out of this. Take a look at the link below. Let me know what you're doing with gold and silver, where you see the price, and please hashtag silver, hashtag gold in the comment section, and put your price prediction for where it's going to be in January. I believe you're going to see well over $30 an ounce. To be honest with you, I wouldn't be surprised if we saw it break its all-time high of $50 by January 1st. I could be wrong, but that's where I'm putting my money right now. All right, with that being said, the Economic Ninja is out.